Hello, chart watchers, and welcome to this Monday, March 18th, 2019 Market Watchers Live show with your hosts, Tom Boley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show, and for our regulars, welcome back. Well, let's take a look at what's going on to start off the week. The Dow Jones Industrial Average currently down 25 points. The S&P 500 off its earlier highs, but still up 3 points. The NASDAQ, same thing, off earlier highs, up about 3.5 points. The Russell 2000 up 2. 10-year Treasury yield about flat, but trading below that 2.60 level. Closed there on Friday and still remains there, 2.59%. Volatility picking up a little bit. I'm a little nervous as we go into the week. I'll talk about that in just a couple minutes. But financials leading here, breaking out, really nice action. Energy trying to make a double top breakout just above that 66 level. These are the two best performing sectors today. On the bottom side, we got communication services, which had a really nice week last week, but has pulled back now considerably. We've got internet stocks, the biggest reason for communication services struggling. Internet, one of the weakest areas of the market today. After breaking out, you can see the last few days we have been moving lower. One of the big reasons there, Facebook. Facebook was up trying to make a breakout above the early February highs, failed. You can see a couple long tails there. Couldn't quite sustain that move to the upside. Now we're back down challenging 160 support. If we lose that, we could see more selling in Facebook shares. Synaptics lowered their guidance. You can see one of the worst stocks in the market today, down over 20% now, having a really rough start to the week. Erin, how was your weekend? Are you all warming up out there in Southern Cal?
Yes, we actually saw 80 this weekend. I was absolutely shocked. I still didn't turn the air on. I'm still sitting on the heater because it still gets pretty cold at night. But yay, finally over 70, and then oh my gosh, over 80. That was just such a nice. It was a nice change, that's for sure. So
Yeah,
I'm happy to be back to regular Southern California weather.
Yeah, but now you've got the moves, and they have to stay inside and get all unpacked, so you can't even get out to enjoy it.
Oh, I have to take breaks.
All right, fair enough. Fair enough. Yeah, it warmed up a little bit here over the weekend as well, actually last week, and then the weekend kind of cooled off a bit, but it was still sunny. And I looked at our advanced forecast. Now, anybody who's in the mid-Atlantic, southeast area of the U.S., I mean, we have, and I know you all out in Southern Cal have been hit with rain too. We have been inundated this year with rainfall. And I'd gone out and played golf last Monday for the first time this year, first time in 2019, because there's just been so much rain. It's been so cold. But anyway, it was really bad last Monday. But I looked at the advanced forecast. Next 7 days, it's just sunny.
Well, that's good.
Yeah, I'm very excited. Just in time, for the Masters to be coming down to Augusta, Georgia in a few weeks.
Oh, my gosh.
Yeah, looking forward to some sunshine, maybe drying out some of the golf courses, get some warmer temps.
Yes, absolutely. I might have to turn on the sprinklers finally.
There you go. All right, what do we got going today?
All right. Of course, jam-packed schedule. We have your workshop on Tuesday, analyzing average true range. That'll be great to learn more about the ATR. David Keller will be back with us on Wednesday. And then Thursday, we're bringing back Mr. RRG, creator of the RRG, Julius DeKempener. So he's always fun to have on the show, and he will be here on Thursday. All right, today's agenda, Monday setups, is what we're going to start off with. And then John Hopkins happens to be here for the earnings spotlight. 10 and 10, our very first symbol is going to be Synapsis, SNPS. And then we're going to finish off with the sentiment update. I'll let you know what people are feeling and where their cash is going. So let's get it started, Tom. News and headlines.
All right. Well, let's go ahead and start off first with economic reports. Really just one. We do have a Fed meeting coming up this week, so that'll be very interesting to see what the Fed has to say and whether they've changed their tune given the strength in the stock market since the beginning of the year. But we did have the March housing market index out earlier this morning, 62 versus 63 expected. So pretty close to expectations, but we did come up just a tad short. And you can see currently, make sure I've got a quick update here. But yeah, we are still sitting right near that 2.59, 2.60 level. been drifting lower throughout March. It certainly appears like we're going to go back and test that 2.55 area, and I would certainly hope that we hold it. Talked a lot about that, so I won't spend much time there, but anytime you get a breakdown, the yield's typically not good for the stock market, so hopefully we hold that January low. There were a couple of earnings reports out, but really nothing big. We had lumber liquidators and Overstock come in, and to be honest, both reports were not very good. Lumber liquidators did beat on the top line, or excuse me, on the bottom line, 17 cents versus 16 cents. But Overstock came up well short, warned going forward. Actually, neither one had very good things to say about as we go forward. A couple of reports after the bell today. You can see if you're interested in the cannabis stocks, Tilray, TLRY is reporting after the bell today. That might pique your interest. But really, not a lot going on right now. And probably for the next few weeks, we really won't see a whole lot in the way of earnings reports until we start kicking back into gear in about the third week of April. All right, I want to start off. I said earlier, I'm a little nervous about the market this week, and I just want to point out a couple reasons why. So first, I wrote an article over the weekend, Chart Watchers, which comes out every couple of weeks. And, you can read my headlines. Could the S&P 500 fall 2.6% every year for 16 straight years? Of course not. It was a little bit of a play on something else that I wanted to point out. But if you're not familiar with how the market works, I just want you to look at these numbers. Now, this is the annualized performance on the S&P 500 by day of the week since 1950. So you can see Mondays, not great, minus 15% roughly. And then you can see Tuesdays, Wednesdays, Thursdays, and Fridays are all 10% or more, with Wednesday and Friday being the best day on the S&P 500. The NASDAQ since 1971 is not in this article, but it's similar. But Wednesdays, Thursdays, Fridays are clearly the three best, and they're much closer in terms of percentages. But still, I think you can see Mondays start off weak, and then things start to improve. And as you get toward the end of the week, we typically see strength in the stock market. That's the tendency. But what I did in this article is I went back and I looked at the week following options expiration. And first of all, you have to understand market makers have financial incentives in the market. They trade the market. Not only do they get the spread between the buy and the sell when you and I are, buying and selling, but they also trade on their own accounts. And so if you've got if you've got the market heading up into option expiration Friday, you got to keep in mind that market makers are also on that they're also trading options. And if most traders buy call options, which they do, then market makers are on the other side. So essentially they're shorting going into the option expiration Friday. If the market goes up, then the tendency you would expect is that we would see some weakness in the week following options expiration Friday. And this is the S&P 500 annualized returns for the week following options expiration Friday. So this is starting today. So Mondays, minus 38.99%, really bad. And you can see minus 14. It's a lot worse. Tuesdays, much worse. Wednesdays actually show stronger numbers, which is a little surprising when you look at all the other numbers. Thursdays, 12 percentage points lower. Fridays, 11 percentage points lower. I mean, it's across the board, Mondays through Fridays, with Wednesday being the exception. But if you look at just these 5 days, the week following options expiration, over the since 1950, this particular week has produced annualized returns of minus 2.61%. And this represents 4,000 trading days, which is the equivalent of about 16 years. So again, if I said the S&P 500 is going to drop 2.6% every year until 2036, you'd be disgusted. You'd never want to see the stock market. But in essence, that's exactly what it's done the week following options expiration Friday for the last 70 years. So just going into this week, I'm always a little cautious. And I'm going to show you some charts. And I'm going to start off here with the S&P 500. This is why I'm a little nervous going into this week. S&P 500 higher, PPO lower. NASDAQ, prices higher, PPO lower. NASDAQ hourly, higher prices, lower PPO. S&P hourly, higher prices, lower PPO. All right, let's take a look at some of the sectors that have been strong. How about technology? I want to show the daily, but first, higher prices on the hourly, lower PPO. Let's go take a look now at the daily on the XLK, and I'm going to follow the dailies on these other ETFs. Higher prices, lower PPO. Real estate's had a great year. Higher prices, lower PPO. XLF leading today, really strong. Higher prices, lower PPO. XLC, communication services, negative divergence, higher prices, lower PPO. XLY, consumer discretionary, trying to make a breakout with a much lower PPO. How about some of the key industry groups that we talked about on the show being so strong? Internet stocks, higher prices, lower PPO. DJ USBC, broadcasting and entertainment, just made a breakout last week, lower PPO. Specialty retail, one of the hottest areas of the market for quite some time, just tried to make a breakout today. Look at that PPO, way lower. So right now we got a false breakout in a group with a negative divergence. Renewable energy, probably the strongest group so far in 2019. Higher prices, lower PPO. Pipelines, that's been a great part of energy along with renewables. And you can see higher prices, lower PPO. Anybody seen a pattern here? SP. So now let's move into the financial area. Here's specialty finance, higher prices, lower PPO. Probably boring you at this point. I think you're getting the picture. Mortgage finance, trying to make a breakout here with a much lower PPO. There are others as well. I could go on, but I just want to kind of paint that picture. First of all, it's option expiration week. We already know historically this isn't a great week. Doesn't mean we can't go higher. We've seen plenty of times where the week after options expiration goes up. I'm not saying that it's guaranteed we're going lower, but there is a much stronger tendency for the market to struggle this week. And when you throw in all of these negative divergences, got a Fed meeting coming up, I would be really careful. I've actually moved almost entirely into cash, and I might be into cash entirely by the end of the day today. I'm just not going to take any chances with all the warning signs. I'd rather see if the market pulls back here a little bit. So just giving away a little bit of giving a little heads up, Aaron. I know we got that poll running, but I think the S&P is going to be lower at the end of this week. And we'll just, we'll see. I did want to show one chart here, though, and this was of Boeing before I turn it back over to Aaron. Boeing, of course, having a lot of problems. The Wall Street Journal reported that federal prosecutors in the Department of Transportation are investigating the FAA's approval of the 737 MAX planes. And one good thing that I see on this chart, though, do you see any big red candles, like filled red candles? With the exception of this day, they're all either, kind of non-existent or they're hollow, meaning that there are folks out there buying on this weakness. So that's the good news for Boeing. I would still be real careful if it loses gap support, though. Something to watch for. FIS agreed to acquire WP, which is WorldPay, for approximately $43 billion in cash and stock, but roughly 90% of it is stock, 10% cash. So FIS, you can see the acquirer did gap up at the open, but you can see has really been selling off. And then WorldPay, this worked out to about $110 or $111 a share. You can see it opened at that price, but because it's 90% stock transaction, it is following FIS lower since the opening bell. Anyhow, I know we got some upgrades, downgrades. What you got, Aaron?
All righty, let's get it started. It's actually pretty even day as far as how many upgrades and downgrades there were. Today, I'm going to look at 3 upgrades and 3 downgrades, and we'll start off with the upgrades. First one being Adient, ADNT. This was upgraded by KeyBank from an underweight to a sector weight. It's sitting right there on the support level. It'd been in a very steady decline, and now we're in pretty much a trading range. I still don't like it. If it could hold that support, maybe you might get to the top of that trading range again. But, following suit with GE and a lot of others, just because it's sitting there at the bottom of the chart and it looks like it's slowed down here at support, does not necessarily mean it'll hold it. And given the PMO sell signal, and then, of course, the steady declining volume on the OBV, making a lower low. Really not the best setup at all. Even on an upgrade, I wouldn't be looking too closely at that one. JCI, Johnson Controls, was upgraded by Wells Fargo today from a market perform to an outperform. And they now have raised their target to $42 on JCI. It looks pretty good here, I have to say. Got the nice breakout above 36, currently trading above. And it looks like it made it opened near its high. So that could be interesting by the end of the day if we end up with sort of a hammer situation. That would, of course, be negative. But you've got the 50 is already crossed above the 200, which I like. PMO's been kind of indecisive, which I'm okay with, actually, because it's been on a pretty steady uptrend. So acceleration wise, it makes sense that the PMO would flatten out a little bit as it measures acceleration. Getting ready for that buy signal. The OBV has been steadily moving up as well. So I like the breakout here. I think you could look for $38 where we had some resistance setting up, as well as that high we had for the year back above $39. So this one's shaping up pretty well. And of course, many of you follow the PMO would be like, well, what the PMO is so very overbought, but really it isn't. You can see that the bottom end of the range has been at about -3, -4, which means you can expect the upside of the range to be +3 or +4. And you can see we're only at 2.5. Next one up for upgrade, Summit Insights Group moved Qualsys from a buy to a hold. So not the best vote of confidence there, but we're looking okay. It shouldn't be a buy to a hold. I think it's supposed to be a hold to a buy, my bad. So anyway, you can see that we have a rising trend coming in here, a very excuse me, gentle one. But the PMO is turning down for a second time under its signal line. So even though we got a little bit of a breakout here intraday, we're trading at the lowest part of the range, and the OBV doesn't look all that exciting. So I would leave that one alone. Aramark, let's move to some downgrades. Aramark was downgraded today by Nomura from a buy to a neutral. And you can see the PMO is on that sell signal and continuing lower. I don't see anything that great here, except maybe you've got some shorter term support holding. So, there's some possibility there. The PMO is starting to decelerate, but this is on the upgrade. You notice we were in a short-term rising trend. We got that double top. We've executed it. You could very easily see this go back down and test the lows from December here for Aramark. Next downgrade, Quest Diagnostics moved from a buy to a neutral by Credit Suisse. And it's just gotten a buy signal. So here it is downgraded. And then I see a flag formation sitting in here. So look at the OBV. It looks pretty healthy right now. So this was downgraded. Of course, it was downgraded just to a neutral. They're not really saying get rid of it. The key right now, excuse me, is this $90 overhead resistance. It matches up to this October low, and you can see it failed twice. There's a failure right here back in December to get above there, and we had another failure back in February. We've hit that area, and you can see it didn't even get all the way up to it, and we're starting to move back down. So 50 is well below the 200. I still think this could be an interesting play. However, in the shorter term, you may want to wait till that $90 range has been breached or set that stop really tight. But a flag executing here would be nice. And finally, we'll finish off with Ingersoll Rand. And this one was downgraded by Wells Fargo from an outperform to a market perform. And as you can see, we're on the sell signal already. We are failing at overhead resistance and have been since middle of February. I'm not a real fan of this particular one. The OBV looks okay. you know, we're making some new highs as far as the positive, but you can see that the scooter is trickling downward. And again, I don't like to get involved in anything on a PMO sell signal, especially if the PMO is still heading lower. So that's all I had for the upgrades and downgrades. Here is the list. I will have these up in the Market Watchers live recap. So you can go back and look at those economic reports and look at the earnings slides as well in that Market Watchers recap that I will publish at the end of the day. All right, let's go ahead and move into Monday setups. And, you know, Tom, we both did all right. I did end up doing a little bit better with TWO too. So we'll go ahead and take a peek at those charts. Let me grab this. So the first one was 2. And from my perspective, we had, let's see, I gained about 1.7% on this one. I think this one still looks really nice. Nice scooping bottom here, which I like to see. And then you've got the PMO buy signal did come in. When I've selected this, it hadn't come in yet. And look at the powerful volume here. Look at all that positive volume. So the OBV obviously is making its move and increasing as well. If we could see that OBV get above this previous top, even before we see it get to that top over there, I think that would be also a really good sign. So I like my pick. And I think it's a good hold. Just watch out for that gap resistance. All right, Tom, let's look at NSP. And I calculated, you know, you got about 1/3% here.
Yeah, I mean, it had a pretty good move last week. Was up to about 126 or something. Pulled back. I held on to it, but I didn't like Friday's candle, and I didn't like going into this week. So I actually sold it on Friday at the close, right before the close. But it's up 12 cents today. I would just say if I was holding this one, the 20-day closing below the 20-day would bother me, and especially a close below about the low that we saw a little over a week ago, right around that 121 level. Yeah, 120, 121 really needs to hold here. So I would just make sure I keep a tight stop. I like the stock. I think eventually it goes higher. I'm just a little worried about the overall market, as I talked about earlier. But yeah, NSP was okay. It did, like I said, give back some of the gains on Friday, but that figures, you know, right before Monday, you know, we have to come back on here. It's going to come back down and spook me.
That's how it works, you know. But and the thing is, too, guys. I mean, when I pick my stocks, I'm not a short-term trader, and so a lot of times the ones I'm looking at, you know, might take a little while to get going, or they've already gotten going, and so now you need to, you know, hang on to the ride to the upside. So it's always kind of a challenge for me. But I did find a few this week. And mainly because I did my scan and I ended up with quite a few candidates in there. And interestingly, I did get a message through customer service that people wanted to know, well, now that your scans have all of these results, how do I narrow it down? And, you know, it's I did a workshop, maybe I'll have to do a repeat here soon, where I talked about sifting through your scans. And really a lot of it is just, you know, for me, practice of seeing certain chart patterns that I like. But the main thing is I'm looking, obviously, the scan already is giving me PMOs that are turning up, but haven't necessarily made their buy signals yet. And then I like to look for, you know, breakouts, possible chart patterns. You know, we had a nice breakout here, but we already have this move running, and the PMO's a little on the overbought side. So that would be my first thing is, no, I'm not going to pick that for a Monday setup. For an intermediate term trade, there's a possibility there, but I'm not going to look at AFLAC because the ones that I picked, actually the first one I ended up with was GLPI. And what caught my attention was that flag formation and the PMO getting ready for its positive crossover. And then when I pulled up the chart and saw a healthy OBV, I mean, you could see in the thumbnail, especially, we've broken out of that declining trend, which I like. And the scooter, of course, is a good value because that was part of my scan. So GLPI, and this is a specialty REIT, I think it's forming a bit of a flag here. Now, my caution would be, especially when I look at it in the thumbnail, is we are looking at kind of a broadening pattern as far as what would be considered the, the flag portion. And, generally when you start seeing broadening formations, that means, of course, you're increasing your volatility. And so sometimes that's maybe not the place you want to get into. But what I liked about this one was it's already pulling back. It's at the low right now for intraday. And if it were able to hold that 5-day EMA, I think this one could be very interesting. You could see that very short-term support landing right at about 36.75. So I thought that could be an interesting short-term play. And then let's see, what are the other ones? I'm just going to start typing them in. But, really that's what I'm looking for. I'm looking for chart patterns, and I'm looking for PMOs that aren't particularly overbought. I prefer them to be oversold or just above the zero line. I think those are the ones that have the best potential. All right, so let's look at my next one. It happens to also be a REIT. I'm not focusing on the industry groups or the sectors when I do these scans. So it's always interesting, and you can see where a lot of times, and Tom, you do relative charts all the time, and so it's nice when you can get something that looks pretty good. So relatively, if they come up, even though that sector may not be performing well, there's still stocks within that probably are. Really nice PMO setup here for Rexford Industrials. Nice breakout already. But again, it's already making that run. So for a short-term trade, may not be the best choice, except for the fact it is sitting on this support level. And if it can hold that 35.50 area, I think even short-term, you're going to see a pretty nice rise out of it. But as far as trading it short term, I think, like I said, possibilities, but I think it's a better looking intermediate term play. Shen, and this one I'm pretty sure is the one I am going to pick. And it may not look like the best chart that I have ever looked at. I mean, obviously the PMO, when I looked at it earlier today, it was rising. It looks like it's starting to decline right now, but OBV is heading the right direction. You already have one that's a strong scooter. Yes, it's been in a bit of a trading zone here, but what I'm looking at short term, and I'm going to annotate it right here for you, is this ascending triangle right there. And of course, the what you're expecting is a breakout to the upside and a move about the size of the back end of that triangle. And that would, of course, put us right here challenging that $50 range. So I think Shen, as far as a short-term play, looks pretty good. So I'm probably going to go ahead and I'll just take that right now at 46.09. All righty. Let's just cancel that. Okay, the next one up, and 3 more. I'll just go very quickly. I want to give Tom his due. Symantec, I thought looked pretty good. Nice moving PMO bottom above the zero line, not overbought. Testing some overhead resistance though, and that was one of the reasons I did not pick it, is at 23.50, you can see there's some resistance, but it did have a short-term breakout from a declining trend. And then UGP was one I looked at. A utility, and you can see PMO buy signal lining up right now just above that zero line. Look at OBV is starting to break out from previous highs, and of course Scooter's already strong. If you were to draw a declining tops trend line, you're going to see a little bit of a breakout there, holding that 20-day EMA right now too. So that was one choice. And then finally, just to throw another one in here, another utility, SJW Group, breaking out right now. PMO buy signal just kicked in. Look at the volume coming in on the move Friday. Scooter trending higher into the hot zone. So those were the ones I had, Tom, and I'm going to pass it back to you.
All right, I actually pulled up your Shen for you because I actually like this pattern too. First of all, I like the group. So that's one thing I kind of start with. Even with all the negative divergences I was showing earlier, the wireless telecom group looks pretty strong. But here is the Shen. I see equal highs and rising lows on this longer, well, for me, longer term, going back the last few months. I see a nice little ascending triangle off of this uptrend. So I kind of like that because of that. But what I wanted to just point out quickly was on the mobile telecom, you can see that it is on Friday, it actually broke out to about a 3-month high, and look at its PPO. It's actually strengthening. So unlike some of the other areas, I think the mobile telecommunications group is one area looks pretty strong. So I actually, for those reasons, I do like your Shen pick.
Oh, nice.
Yeah, but let's go ahead and take a look. And again, I'm a little nervous, so I don't own any of these that I'm about to show you. But one I'm definitely watching, and if I felt better about the market, I'd be in on this one. I really like Foot Locker. The worst part about Foot Locker, and this is going to be my pick, by the way, so I'll just go ahead and take it right here, 59.74. But it gapped up with earnings. I love these stocks that come back and hit gap support. We might take a look at some of these later in the show. But coming back down, hitting that gap support area, also some price support. The prior breakout was just above 58 and a half. So I think this area right in here, I'm just going to say from the 50-day up to gap support, 58 to 60, I think is a pretty good area, because I do expect in time we'll get back up to that 68 level on Foot Locker. So that would be my pick. Now, as far as some other stocks, and I'm just throwing these out there as stocks that look very interesting to me. I love the breakout here on Bank of America. Bank of America reported great earnings back in January, had been holding up really nicely, going sideways, and now is making this breakout. I find that to be bullish. Cree, now we're going to move over into the semiconductors. Semiconductors have been so strong, and we saw Cree gap up on Friday, break out. We gap lower today, but again, another hollow candle. But one of the things that bothers me here is that negative divergence. So if it fails to hold the breakout, I would be careful. McDonald's, I think McDonald's has a nice pattern that's been developing here. Very similar to what we just looked at on Shen. Equal highs, rising lows, off of an uptrend. I expect in time McDonald's to make this breakout over 188. I think that would be very bullish. Leggett & Platt, LEG, after moving up and getting through the prior highs, you can see we weakened. PPO's almost all the way back down to the center line now. RSI is down closer to 40, and we've got some good gap support coming in at about 42.40 or so. Earlier lows, 42.83, and this is after the stock was up over 46. So I think this pullback is a nice opportunity here. I don't know if I'm going to pronounce this right, but Viavi Solutions, VIAV, another one, huge move up. This one doesn't, well, let me go ahead and pull it up on a regular chart. I want you to see the volume. But here you can see the huge volume in February on the push to the upside, coming back down on lesser volume. I think if the stock gets back down to about 11.75, it would be very interesting. We're at 12.16 now. Stock was at 13.50 just 2-3 weeks ago. Trex. And another one with a big, this actually with earnings gap down and then sold off down to about 70, just above 70, and then rallied back up, closed at about 77. Well, we've worked our way all the way back down toward that 70 area, and that was where we broke out from 70. So this is an area I could definitely see Trex making a reversal. Dana, which is an auto parts company, DAN, big breakout, heavy volume, clearing the prior high at about 1790. Notice last Thursday we came down to 1790. This was a stock just a few weeks ago up near 21. Lazy Boy, LZB, big move up, heavy volume. Look at the top of gap support. Also, the prior high becomes price support. Came back down, tested the 20, bounced a little bit, but we're right back down close to a key area. I think the 32 to 33 area is really good support on LZB. Walmart. Walmart, I actually do still own this one. I actually have two stocks right now, and Walmart is one of them, making a nice breakout to the upside, holding 20-day. I like Walmart mostly because I just think it's going to defy a pullback in the market. If we do pull back, I think this is one that can hold up. Hasn't really been going up for the ride other than back with earnings in mid-February. We've kind of pulled back and kind of been going sideways, but I like the action today here on Walmart. I think this one's going to go back and challenge that 103 area. And then the last one I have is Monster, MNST. Big gap up on heavy volume. This is earnings related. Came back down. Didn't quite get to gap support, but got close. Starting to turn back to the upside. I like this one in that 58.5 to 60 area with that rising 50-day coming up from underneath. Again, kind of like Foot Locker, I would expect we're going to make another run for that 65, 66 area in time. So let's summarize our Monday setups for this week. You can see that Erin has Shen, 46.09. I'm going with Foot Locker at 59.74, and we went through a number of other stocks there as well. All right, well, let's move on and move into our earnings spotlight. This earnings spotlight is brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low risk trading candidates, and they'll teach you to focus on the combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com, better timing, better trades. And Mr. Hopkins, welcome back to the show. And how are you doing today?
Hey, I'm doing good, Tom. How are you?
I am not going to complain. I was just, at the top of the show, Aaron and I talking a little bit of weather. We like to throw in a little meteorology in with our show, and it's been so nasty here on the East Coast and West Coast as well. A lot of cooler weather.
Yep.
But you were saying before the show, you had a pretty nice weekend.
Yeah, it's beautiful here. It's going to be 70 in Charleston, so no complaints. We are also talking just a little bit about the, March Madness and tournament, coming up. And, I'm stuck in the past, okay? Because, this will always be in my memory bank. This was back to 1992. And this was a game between Duke and Kentucky in the East Regional Final to determine the final spot for the Final Four. And you might recall, with about 2 seconds left, Duke was trailing 103-102. And there was a pass from the other side of the court, like full court, to Christian Laettner.
Yep.
And he turned around at the foul line and he made it.
Yep.
And I was the only person in the pool who had Kentucky. And if Kentucky won that game, there was nothing in my path. Okay?
Yeah.
I had it. I won the whole pool. So 27 years later, that's it. That was my 15 seconds of fame.
The curse remains.
The curse remains. I tend to break, I hope to break it this year. But I'll tell you, man, that thing stunned me and I just never recovered.
Well, can you give me your pick for this year so I can throw them out of my bracket pool?
I almost feel like I have to pick Kentucky and give it another shot.
Yeah, what is this, like 28 years in a row now you've picked Kentucky?
Yeah, I don't know.
Hey, you're a Michigan guy. I know you're not picking Kentucky.
No. Michigan State.
Well, you got to pick one or the other. I mean, that's a pretty big rivalry. Which one do you like?
I'll pick Michigan, of course.
Okay.
Yeah, good luck with that.
Yeah, well, I tell you what, and we'll get on to the earnings here in just a second, but I got to say, for those sports fans out there, maybe many of them will agree with me. I think they really got things screwed up between Michigan and Michigan State.
Yeah, I agree.
Michigan State beats them 3 times, and their reward is to get put into the bracket with Duke, who's the #1 overall seed, while Michigan goes out west into Gonzaga's bracket. But
yeah,
hey, who am I?
Anyway. So listen, a couple of stocks here.
Yep.
I wanted to talk about. I actually want to feature in my Chart Watchers newsletter. Was Trade Desk, TTD.
Yep.
And really the whole purpose, of the article was that, there's been a lot of stocks that have reported great earnings and they've made, really great moves and they're on my radar screen, but I'm not chasing them. I'm going to wait. If you take a look at TD, the things from when it closed just prior to the earnings, you can see the big gap up, right?
Yep.
The stock rose over the next month or whatever it is, 61 points, 40%. So in my mind, it's not unreasonable, Tom, for stocks to see a 50% retracement, after they make a really big move to the upside. And you can see even today, right? Almost right on cue that the stock is pulling back. Now, if I got lucky enough to get it back 50%, you'd see something around 180, 185. And, people think that's just not going to happen, but it's not out of the question. The market's pretty stretched here. And any kind of a decent pullback, I think this thing could pull back easily, to that 180 range. And I think it would become a high reward to risk trading candidate. So I'm not going to chase it. But if I can get that thing back, coming my way, this is the kind of stock I want to own. And people, when they see these big moves, they say it'll never come back to you like that. That's just not the case.
Yeah, I think, I just drew a couple of annotations here on the chart. I mean, anytime you get a big gap up and a large hollow candle like this, the top of gap support is what I look for, is the major support level, not not a fill all the way back down the bottom. I don't
Right.
think the desk is going to see 150 unless something really happens in their business model or the overall market just completely falls apart. So I would agree. I think that a 50% retracement from the 150 to 210, that would bring you back to 180, which I actually think that 175, 180 area would be excellent support. And one of the problems I have with the market, and I spent, I don't know, 5 minutes or so at the top of the show pointing out, was that there are negative divergences everywhere. And I think, here's another leader, Trade Desk, which has been a great stock, higher prices, lower PPO. This has been across the board. I'm seeing it just about everywhere. And it's making me nervous, especially if we start to lose key price support levels. And for Trade Desk, I think around 198. That was the last breakout here, was getting through this 198 area. So if you come back down and close below 198, I think we could see a swift move in some of the stocks back down. We'll see.
Yeah, but that's the whole point. The point is, you see these great moves, you're disappointed you missed them, and you say, gosh, the stock will, never come back to you. But you go back in history, you show me a stock, this might be a few of them, you haven't made these big moves only to come back to you. And then if you get back near the 180 level with a tight stop, the reward to risk could be terrific.
Yep, that's the whole idea. That's why
I got another one here.
Okay, what you got?
Two more, actually two on this topic. Wayfair, W.
Okay.
You're going to see very similar, right?
Yep.
The action there. So this is a case where Wayfair has risen 56 points from the earnings date, up 47%. 50% retracement would take it back to about 145 in that range. That's an area I'm going to look for, like 145, 150. And to me, that's going to give you a real nice reward to risk.
Yep, I agree. I think, again, you've got the negative divergence, higher price, closed above. Already we failed, put in a bearish engulfing candle last week. So until we can get back through that 172, 173 level, I think Wayfair at a minimum is going to consolidate, and potentially we could sell off. Now, I think it's got pretty good support around 160, and you got the rising 20-day, which is coming up right underneath there at about 157 right now. So that's an area that you might look for some support if it pulls back. But if it lost all of that support, I think it could be a very, very quick trip back down, potentially to the top of gap support down around that 142 area. I'm not saying it's going there, but we've seen this many times before where, the market just gets a little weak. You start running out of some momentum, and some of these stocks go down quickly, because anybody who bought at 170, 172, if this thing were to break back down below, say, 155, you're talking about a 10% decline in a very short period of time. People panic.
They panic.
Sell, and if you got cash available, you can buy it back cheaper.
And the last one in this category is one dear near to your heart, Chipotle, CMG.
Oh yeah.
I mean, again, you see, you're seeing like a dupe. This one actually a little bit steadier in terms of its rise, but still, it's gone up 126 points, about 24%. Could it retrace, 50% down to the 590, 600 level? I don't think that would be out of the question.
Yeah, this one I like, and I actually owned it until Friday. I did sell it, so I'm not in on today's gain. But I again was just getting out because I just didn't like the overall market going in, options expiration week, everything just kind of, I didn't want to take any more chances in the short term. But I like the stock, and the one difference I see here is that when it made the breakout above this prior high, when it did that in early March, you could see the volume pick up. It actually picked up over these prior days. Same thing when it got through the 620 level. As we went up, the volume picked up. Now the volume is, maybe drifting a little bit lower, although today's volume is not bad. I mean, we're at the halfway point of the day, and it's already done 364,000. So it's probably going to do probably 700,000 today or more. That's not horrible, but it is way overbought.
It's so overbought.
It's gone a long way, but that also tells me that you got a lot of demand for the stock. There's a lot of institutions, I think, that are, apparently liking the burritos at Chipotle. I love the burrito. I've never met a burrito I didn't like, actually.
Okay.
Saying that's probably too much information, but this stock looks really good to me. I would love to buy it back, and I actually would. If it got back to about 620, I'd be tempted with a fairly tight stop, because I do think this one's acting a lot better than some of the others.
All right. And then a couple of stocks real quick, a little bit different. These are stocks that just powered higher. on stronger earnings. But here's a couple of stocks that missed earnings and have actually done pretty well. One is American Express, AXP. And if you take a look at, American Express, even though it missed its earnings, it shows you sort of the power of the market right now, that traders are kind of avoiding, even bad news in some cases. And this thing has really sort of defied in spite of it missing its numbers.
Yeah, it's right up against the major resistance level. I would just say that December high at 114. Yep. That's where all the sellers kicked in. And I don't know if we see that again here, but this is a level where I would be tempted to take some money off the table and see if I can get through.
Absolutely. And then two more. One is OI, Owens, Illinois. That's another one, that has actually held up pretty well. It's struggling a little bit, but, considering, missed its earnings and sold off, the market seems to be just a little bit more forgiving in this environment than they were, let's say, the end of last year.
Yeah, this one I think already had that negative divergence, and that is a shooting star candle, gap up. Looks like it was, breaking away off to the races, then reversed. And if you didn't, if you weren't too upset by that candle, the next day you can see a very, very weak day. And this is an example, I think. Stock was over 20.75, and 2 days later it's at 19.25. So we're talking about a 7% haircut in 2 days with a negative divergence, lower PPO, higher price. And what I look for, 50-day tests and or PPO centerline test. We didn't get either one, but we got really close to both. And so I think this is one that's already kind of gone through some of its weakness as a result of the slowing momentum. And so the fact that it's breaking to about a 6-7 day high here, I actually look at this one a little bit more bullish than I would some of the others.
Yeah, and the last one, and on this one, is a stock that really missed its numbers. And the symbol is HAIN. And if you pull that one up,
yeah,
you're going to see that it missed its earnings per share, 14 cents against estimate of 26, and revenues 484 million against 612. And again, just sort of showing you how some traders are ignoring bad news and just looking for, maybe a lot of the stocks like Trade Desk and CMG and Wayfair and others, have made their moves. So they're sort of digging underneath the surface to try to find other stocks that they might put money to work.
Yeah, I would look at a stock like this and just say rising tide lifts all boats kind of a thing.
Yeah, that's what I'm saying.
Yep, so much money's come into the market. I would say that this stock took its dive before the earnings came out. And this is one of the reasons, obviously, why we like to follow technical analysis the way we do, is because why was this company selling off over 2 months? I mean, I know the overall market sold off, but Hain went from $26 to $15. So it went down 40% in about 7 weeks. That was not the way the market dropped. The market didn't drop anything near that. So clearly it was an underperformer. We got a little bit of a bounce. Then they came out with their bad news, which is why they were being sold off in the first place. That hollow candle on the biggest volume on the chart, that actually looks like an exhaustive gap to me. And now we're moving back up. This would not be one of my favorites in the market, but I will say that the volume has been supporting this move to the upside. If I owned it, as long as I stayed above this 20-day moving average, I'd be okay.
Okay, great. Well, I want to mention one thing real quick.
Okay.
And actually, it was my article as well, that I've got a little free newsletter that focuses on earnings and earnings-related news. Comes out Monday, Wednesday, and Friday. And anybody goes to my article or goes to the homepage at Earnings Beat, you'll be able to see there's a free newsletter link. And be happy to have people, since that's what we focus on, be happy to have people join our community and, keep them posted on stocks that are getting ready to report earnings, ones that reported, maybe a couple of nice setups, that type of thing. So anybody interested, please, I have you join us. It'd be great.
That's awesome. I also want to say, I mean, when we look at the market, you've got earnings, you've got interest rates. I mean, the Fed policy along with earnings. I mean, those are the two things I think most would agree drive the stock market. What kind of policy are we going to have from the Fed? And then what are earnings doing? And so I think having a newsletter talking about the earnings is certainly a a good thing. But we do have the Fed coming up. Any thoughts on what the Fed might do tomorrow? I think actually they meet tomorrow, and I think their announcements on Wednesday.
Oh, really? Yeah. I don't know. I mean, I think that they're, I think that whole, I think the Fed's on the sideline.
Yeah.
I just think they're on the side. I don't know. I'm still thinking that everybody's waiting for a great trade deal, which I wouldn't count on. Maybe there'll be some kind of maybe that's the sell on news event. I don't know, but I don't think the Fed. I don't know. I think the last couple of meetings, somebody put a script in front of Powell and said, "This is what you're going to read," and that's pretty much, he got took to the woodshed.
Yeah, I don't.
The market gets spoiled, Tom. The market's funny. The market gets so spoiled, and they want to get their way, and quite often they get it. And I think that one of the things that this administration is really into is the market and how it performs. And I think when it started making that big dive in December, there was a little chat. Put it that way. And here's the next couple of meeting statements that you're going to read.
Yeah.
So I don't think it's going to change.
Yeah, I'm guessing there's been a lunch or two that's taken place since December. There's no doubt about that. But I mean, I would hope that the Fed still keeps its independence and objectiveness. I think that's what the market needs.
All right.
But, anyhow, yeah, thanks so much for stopping by. I'm glad your weather's improving.
Thanks for having me.
Good luck to Kentucky.
Go Kentucky, and if they can't win, then Michigan.
Kentucky and Michigan. Good luck.
All right.
I'll talk to you later. All right, there he goes. Always fun having John on. You can see the symbols that we covered during the Earnings Spotlight segment. And Erin, I guess we will jump into the 10 in 10. Do you have an RRG?
I do. I am ahead of the game for sure today. All right, here we go. You can see really the primary requests are coming from technology, not a big surprise, but followed by healthcare and discretionary. So I'll try and get some of those in. And then just as far as the way it looks, we do have a lot of those Northeast, but look at all the ones in leading that everybody wants to look at. I thought that was also interesting. We have quite a few, I would say, in the green. So let's go ahead and get started with our first one, which is Synopsys, SNPS.
All right. Well, there's a couple things that I really like here. Let me get this chart up for everybody. Yeah, I mean, there's a couple things I really like, and number one, it's in the software space. So they got a good chance of outperforming just because they're in an area that has been such a great performing area of the market. So that's the first thing I would mention. Here's the chart that I was looking at. So you've got overhead resistance that was cleared, and you can see the volume that accompanied that move to the upside. So that's what I always like to see. I like to see the breakout. I like to see the volume, and I want to see relative strength in an area that is strong on a relative basis. And I always talk about the relative chart pointing up from left to right. And I think I could even annotate this a bit further. Let's take a look at these relative charts. So here you've got software relative to the S&P. So if you want to outperform the S&P, this is certainly a good group to start with because the group has been so strong. And then you look at Synopsys relative to the S&P 500, and you can see about the last 5 or 6 months, it's been very strong because it's been a very strong group relative to the software group, which has also obviously been a very strong area. And then you can see software coming off that December low and breaking out above this prior high back in October. So there's really not a whole lot that is not to like about this stock. I did look on a chart with the PPO, and there is a negative divergence, but I tend to avoid or ignore negative divergences when I have heavy volume supporting the move to the upside, because for me, it's hard to really get behind the idea that they're slowing momentum when a stock is making a new breakout on increasing volume. To me, that is showing institutional participation. That is not slowing momentum. So always remember the PPO, MACD, PMO, all these momentum oscillators are based on price, and they really don't take into account volume. So I like to use both to determine. So I think Synopsys looks really good here. It's overbought. If the overall market pulls back, this one probably pulls back as well, but I think it would be a great opportunity. So anything off the rising 20-day moving average, I would be a buyer of Synopsys.
All right. Our next one, the most popular in the chat room, is Tandem Diabetes, TNDM.
Yeah, this is one that's been very strong. We talked about this one probably a little over a week ago when it came back down near that 60 level. I talked about the strength. I'm going to shorten this chart just so that we can maybe get a little bit better look at the candles. But here, yeah, this is where we came back down, tested the top of gap support. Remember, that was one of the things I talked about and always talk about when we get these big gap ups on heavy volume. Many times, especially when a stock continues to go up after that, then I begin to look for the top of gap support to hold. And so here was the gap up. And look at the next 2 days, also on very strong volume, continuing to move up. So when everybody is buying at the open on these earnings-related gaps, market makers provide liquidity. They're on the other side of the trade. They're the ones shorting. And so when a stock keeps going up, to me, it's a signal that there's a lot of demand for the stock. And once that happens, I no longer look for us to go back down to the bottom of gap. Now, does it sometimes do it? Of course. Nothing in the market's a guarantee. But if I'm talking about managing risk, I know this was one we talked about. I'm pretty sure it was on 10 and 10, maybe about 7, 8 trading days ago. When it came back down close to 60, I thought it was a great reward to risk trade. Stock went back up immediately, almost 25%, hit 75 in about maybe 6, 7 trading days. My guess is we probably got a negative divergence now. I wouldn't be shocked to see another pullback. I like the stock. I think overall, longer term, it goes higher. I'm a little nervous about the overall market, but I think TNDM is a great stock.
All right. Let's see. This one was interesting. StoneCo, STNE. And the comment was that Warren Buffett owns 11%. And it is breaking out of a 3-week base on big volume. Says PMO has a bull kiss, kind of. I don't usually look too hard at the PMO on these early IPOs. There's just not enough data for me. So I usually stay away.
Well, on a relative basis, I think you got a great stock here. I think at the top of the show, though, I did mention this company, I believe, that reports earnings after the bell today. Now, if the earnings already came out and we're getting this breakout on volume because of the earnings, I think that's great news, especially if we finish on the high of the day or close to it. But if this is a pre-earnings move to the upside, I would just be cautious because a lot of good stuff is already built into this price. The stock was trading at 21 a little over a month ago. It's now hit 36 and change today. That is about a 70% move in a month or 5 weeks. A lot of good news built in here. So that's what bothers me. I think they'll have a great report. Based on everything I see here, I'd be shocked if they come out and miss earnings expectations. I think they will beat. But we've seen many companies beat and then pull back. I think to the downside, if we fail to hold this breakout, I would be looking back down around 28, maybe first at the 20-day moving average. But I wouldn't be shocked to see $28 print if we get a negative reaction, if everything's already been built into the price. But keep an eye on this one. Double check because this could be a company that reports earnings after the bell today.
All righty. Next one from the hotels industry. And I do note that they were downgraded today. Huazhu Group, HTHT.
All right. Well, breakout, which I love, although based on that candle, I suspect we're going to come back down and fill the gap. So that would be the difference here. When I see a gap up and we just keep going up, then I think the top of gap support or maybe this intraday low is where I would look for support. But I have a feeling this one comes back down to gap support, which is down closer to 36. Great volume, though. So I think if you get the pullback to that area, I would be a buyer. I like the stock. I just think you might get a little cheaper.
All righty. Let's see. Next one I have for you is PPLT. And that one is the Platinum Shares ETF.
All right. Well, the relative chart's not going to work here. So let's just take a look at this. I'm going to stretch it out to a year. Yeah, it's off of a downtrend. I don't think it reverses this downtrend until it clears this 83 level. So as far as annotating here, I see a downtrend in play back here. And here's your reaction high. And we haven't cleared it yet. So I think that right now we are, in a trading range off of a downtrend. So I'd be careful, especially if it were to break to the downside. But I'm not going to start to get any more bullish, even though we had a nice move in February, pulled back, a lot of volatility here. But I wouldn't be overly bullish until we break above $83.
All right. Let's see. Next one up I have for you is, let's see, Prudential, PRU.
I like the action today. I still think we have some overhead resistance to deal with. I know there's a huge spike there on volume on Friday, but keep in mind that was quad witching day. So we saw that on a lot of individual stocks and a lot of indices. But I think 98.99, you can see the failure in October, failure in November, failure at the beginning of March, and now here we are again coming back up. So I would be a little cautious just because we failed so many times at this level already. If we break out, I think that's great news, especially if the volume is good to support it. But if we fail, we could be right back down. I would say 92 is going to be the area of support that I'd follow. So I just think we're in this 92 to 99 range for now.
All right, let's see. Our only industrial sector for our friends in Canada, Bombardier, BBD/B.TO. BBD/B.TO.
Yep, I love the volume the last 4 or 5 weeks on this move to the upside, so that's the good news. The recent high did go back up and test the breakdown. So here we were moving lower, went sideways. Look at the volume pickup on the loss of about $3.10 support. When we went up just above $3, didn't quite get to 310, but that's certainly a level that I would keep in mind. And then the other level, this was off of the low. Where's the reaction high? 260, 255. Sideways consolidation. Look at the volume supporting the move through 260. Look at 260 holding. Can't get through 310. I think right now we're trapped in this range, but I like the volume. So I think we're going to get that breakout above 310.
All righty. Let's see the next one, and it sounds like one we just did, but it's PPL. It's minus the T at the end, and that is our only utilities request.
Right.
PPL.
All right. Yeah, really nice looking chart. PPO looks good. Overbought. That's going to be the biggest concern I have for the stock. So I'd rather see it get a little bit of a pullback because it's a utility, not a lot of volatility. And here is where I think we could pull back. There was your breakout above 31.25. It would be roughly about a 5% pullback. That could coincide if we see the 10-year Treasury yield rise. If the Fed comes out this week and talks about a rate hike at some point down the road, and I would not be surprised, although the jobs report was weak, so maybe they'll continue to keep it on hold. But any kind of talk of maybe higher interest rates could cause some selling in utilities, and that's where PPL might pull back to this 31.25 area. That's something I'd watch for. But overall, this has been a pretty nice performer.
All right. Let's see. Number 9, Lam Research, semiconductor, of course, LRCX.
Yeah, I like Lam. It did put in that false breakout off of an uptrend. That's a shooting star. So I'm a little concerned in the near term for many reasons about the market. But for this particular stock, it had the breakout. It was up at 188, easily taking out the 185 high that we saw in February, but we failed to hold it. And so I think there are a couple of levels to watch here. You've got some gap support and that rising 20-day coming in. They're likely to intersect around 176. So a couple dollars to the downside. If that fails, then I think we could be looking for that 50-day test and the low earlier in March down around 165. So part of it is going to be watching the market to see how the market evolves with all of the issues we talked about earlier in the show. If the market starts to roll over, I would expect stocks like Lam, even though I like Lam, I would not be surprised to see a pullback possibly as low as that 50-day moving average.
All righty. Let's see. And our very last one will be JCOM, J2 Global Communications. JCOM.
JCOM, beautiful move up, heavy volume. I'm pretty sure that was all earnings related right here. Pulls back, hits the 20-day moving average, and then bounces. I'm going to bring this one up on my relative chart because the internet group, which I talked about earlier, having a negative divergence, and we're starting to see the internets pull back a little bit. That might be a problem for JCOM here in the near term. I still like what the stock's doing. I would be, again, watching the 82, 83 level closely. And if we were to break below that level in terms of support, that was the intraday low. There's the candle body, and you can see the 20-day just above it. So if we were to lose 82, I think we have a pretty decent chance to go back to 77 and change to test the top of that gap, and then also to get that 50-day test. So once again, let's watch and see what goes on with the market. But if the market begins to show more signs of deterioration, I think JCOM is one I'd be careful with in the near term. Watch that 82, 83 area. If that fails to hold, then I think we could look at maybe another 5% to the downside after that.
All right. That does complete the 10 and 10. Here are the symbols that we just went over. You will find these in the Market Watchers live chart list. So you can go in there and copy them just like Tom has them there, so you can get that relative chart. Just go to the blogs articles tab, click on the Market Watchers live blog, and there you have it. We'll be right back after this quick message.
Join us April 1st to April 5th to celebrate our 20th anniversary here at StockCharts.com with special guests Arthur Hill, Greg Morris, Gaddis Rose, Martin Pring, and John Murphy. Hey, Erin, we're not hearing you. Welcome back, everybody.
I'm so sorry. Final market update. Here we go. And as you can see, fairly interesting trading. I thought that the most interesting trading, though, has been occurring on the S&P 500 as well as the Russell 2000. As you can see, we made a nice move in the morning, but have pulled all the way back to yesterday's close on both of those indexes, as well as the NASDAQ and the S&P 400. Now bouncing off those closes, or those intraday lows. You can see that Canadian markets are higher on the day. TNX Treasury yields are also higher right now, reading just above 2.6%. And we have the VIX over here. It's managed to move up, but really when you look at it, it's been oscillating really between 1250 and 14. And all of those readings truly are a sign of some complacency, especially after we saw that top, and now we're moving right back down. You can see UUP, the dollar is mostly unchanged. GLD is up 4 cents, reading at 123.01. USO is forming a flag here intraday, and we'll have to see if it can get that breakout. And TLT was a bit higher on the day, but has now dipped into negative territory, down 2 cents at 121.73. And then finally, let me go ahead and I will move us into the sector summary. And here you are. Currently, technology and energy are leading, as well as the financials. Mid-range, utilities, and consumer staples, both defensive areas, rising, but not quite as much as the more aggressive technology sector. Materials, certainly the loser on the day, down almost 0.75%. All right, I'm going to pass it back to you, Tom, and get ready for sentiment.
All right, I just wanted to go through the internet group here quickly because we did get that breakout last week, but we did have the negative divergence, and we failed to hold this breakout, moving back down. Now we've got a pretty good test of the 20-day moving average. We have not closed below the 20-day. So when I was talking earlier about, seeing if we start to see some additional signs of weakness, this would be one that I'd be talking about. If we lose the 20-day moving average today on the close on the internet space, you got to beware of possibly going back down and testing these earlier lows around 1600, which would be about another 4% lower. Now, on a weekly chart, and this is trying to keep things in perspective, we're well above now that 20-week moving average on the internet space. And if you look, the 20-week is coming in at 1596, which lines up really nicely with this price support. So if we break below the 20, that may create some short-term panic in the markets, or at least a little bit more bearishness. But I would be looking at that as an opportunity in the group if we were to fall all the way back down and get close to that 1600 area. Facebook is the one I think we got to keep an eye on. Facebook right now, you can see the volume on Friday picked up, but that was because of options expiration, quad witching. But today, volume is heavy as well. Looks like we're on a pace maybe to match the volume we saw Friday, and we are at a major support level. Facebook's already lost its 20-day moving average. If it loses price support, then we're looking at gap support all the way down at 150.
All right. Let's go ahead and we'll get started on the sentiment update. And here we go. All right. So this is your Decision Point Sentiment Update for March 18th, 2019. I'll be going through quite a few different indicators here for you. We'll look at the 10-day moving average of the put-call ratio, the American Association of Individual Investors, AAII, National Association of Active Investment Managers, NAAIM, and we'll also look at the RIDEX ratio. That'll tell us what cash flow is doing currently, not just polls. We'll look at the poll for the Wall Street Sentiment Survey. I ask you to go ahead and, if you are watching live, go ahead and take that poll so we can see the results after I finish. The VIX, we'll look at the VIX and what's going on with breadth, and then I will finish up with some gold sentiment. We do look at sentiment based on discounts and premiums. Before I do get started, though, I do want to remind everybody that sentiment is contrarian. So that means that when people are very bullish, that means that we are actually looking at something bearish for the market. All right, so let's go ahead and we'll get started with the put-call ratios. I do invert my scales on a lot of my charts, and it is mainly so that I have overbought readings at the top and oversold readings at the bottom. It just makes it easier for my mind to grasp them. So I do usually note when I do that so that it will be a little easier for you to understand why the readings are a little different than what you maybe are used to. So what I'm noticing, first off, I pay mostly closest attention to the CBOE put call and equity put call ratios. I've found, and you can see a lot of times just by looking at the reaction of the OEX put call ratio, a lot of time it's used more toward as a different kind of a hedge. So a lot of times it is almost exactly opposite what the others are doing. So I usually stick to just looking at the OEX, the CBOE and equity ratios. But I do have the OEX on here just for interest's sake. But here's a good example. We had those very low ratios on the CBOE and equity, and then look what happened here for the OEX, completely opposite. So I don't pay as much attention to this. A lot of people ask me, why don't you ever talk about the OEX ratio? Well, that's why. So what I'm looking at right now is clearly we hit a pause for both of these ratios, and it does look like we are bottoming and getting ready to head higher with the ratios. Typically, when we get lows and we start to move upward, like I said, it's like an oversold reading, and that usually when you see these ratios bottom, that's a sign that you're going to get some more upside movement. Now, we've already had a pretty nice tear here and rally, and we're not completely certain at this point that this is going to be a bottom. So I'm reading this pretty much as, I'm going to say neutral to bullish, because I'm not completely sold on the fact that we may have a bottom and a good rise out of this bottom right now. All right, next up, AAII investor sentiment. This is the poll that you can go take at aaii.org, I believe. They basically, you get to click a button, I'm bullish, I'm bearish, and then there's neutral, of course. So I've watched these numbers pretty closely, just because typically when you get a ratio, a bull-bear ratio that's particularly large, meaning you have far more bulls than bears, and you could see it happen back here when we had 2 as our reading, a little over 2 for that ratio. Typically, when you get those high ratios, of course, that means everybody's very bullish. And so the expectation at that point should be a decline. And if you come up right here, that's when that reading came in and we got the decline. It's not always that obvious, and it doesn't always work that well. But the main thing I wanted to point out today on this chart is that we have a fairly even distribution among our bull, bears, and neutral. Pretty much a third are bullish, a third are bearish, and a third just hands up in the air. I don't blame those folks, honestly. So really at this point we are even. You've got a bull-bear ratio that's right about at 1. And so that is really neutral as far as what it's telling us is with the market. I mean, you really can't make a distinction based on the fact that everything is pretty much even amongst the respondents. Next one we'll look at is the NAAIM Exposure Index. I really like this indicator, and I'm so glad that they share it with us. It basically tells you what the active money managers, how exposed they are to the market as far as their portfolios are concerned. And typically, again, it's a sentiment indicator. So when money managers are particularly exposed or excessively, that means, of course, they're very bullish, and that is being contrarian as sentiment, that is bearish for the market. So right now what I'm seeing are certainly elevated readings. We have pulled back a little bit overall since the top we had at the beginning of February, end of January. But as far as just week to week, we did increase, and we're still rather elevated. I mean, you can see that there are certainly a lot of times where exposure is much lower than what we have right now. So I'm reading this as neutral to bearish, just because we still have some elevated reading here, but not overly high exposure like we've seen before. So I wouldn't want to go full in, all in as far as the bearishness of this chart. All right, let's move on to our next one. And the next one is the Wall Street Sentiment Survey, and that is the one available to you right now. If you're watching live, go ahead and take that poll, because I'm very curious to see where everybody stands. And as you can see, this is the actual poll that the market timers take. He has a pretty static pool of respondents at wallstreetsentiment.com, and that's Mark Young who manages that site. So it's really a good indicator in that we don't change up who's participating. For example, with AAII, it's just a matter of who stumbles on the site and votes. With this one, it's a static pool of timers, and it gives you a pretty good sense of where the technical analysts are in the market, because that's obviously what we do as market timers, is we're looking at technical analysis of the market. So the interesting thing right now is we are elevated as far as the bull-bear ratio, and that's clear. You have 44% bullish while you only have 28% bearish. Now, again, sentiment is contrarian, so I would read this as bearish for this week. This poll is pretty much like what you're going to take right there. Are you a bull or a bear as far as the close next week? That is the question. I went in negative, but as far as my brethren, most of them came in bullish, and that does lean, as far as the market is concerned this week, as bearish. All right, next up is going to be our RIDEX analysis. This particular chart, what we do is there's a basket of funds that a company RIDEX used to manage, and they are pretty much evenly distributed between bear funds, bull and sector funds, and then they have the money market funds. And every night we pick up the number of assets in each of those funds and add them up, and then make a ratio where you have the bear and money market assets on top, and then the bull assets on the bottom. So it's a bear bull ratio. And what you want to look at, of course, like I said, is I invert the scale, so you have overbought readings near the top and oversold readings near the bottom. And you can see with the tops, a lot of them have lined up, and this bottom, of course, when we got very extended. Also, tended to do what you expect, and off of an oversold reading, we got price movement to the upside. Well, right now, as you can see, it's been pretty flat as far as what the money is doing. But if you look in the thumbnail, as far as the last week is concerned, we certainly had an increase in bear funds and an increase in the bull funds as well, bringing us actually above the previous top as far as the bull funds are concerned. So money market assets are declining. So really we're seeing a movement out of cash, out of a neutral position, and then pretty much evenly distributing between bear and bull funds. So, you know, really the best I can do on this chart is to read it as neutral, mainly because we have such a split, almost an even split, as far as the increase in the bear funds versus the bull funds. So the ratio has been flattening out here. It's not really doing much. We got a little bit of a top, you can see back here, before that decline that hit us mid-March. Right now we're heading on our way back up, which is, you know, bullish nonetheless for the market, because you've got a ratio rising, and that's what we want to see. And, you know, so it's set up fairly, you know, it's in the middle. So we're still looking at kind of a neutral setup, even as far as the ratio is concerned. All righty. 2 more to go. Let's look at the volatility index chart. And I also have the breadth listed on here too. So one of the things I have noticed, at least with breadth, is we're shrinking the zone. We're shrinking the issues that are advancing and declining. They're getting squeezed into the middle. And to me, that's, you know, telling me something's going on. It's an attention flag. What is it that's going on here? And what I read it as is the fact that we do have that VIX, and it has penetrated that upper Bollinger Band. And so if I were to look at one or the other, for example, if I was just looking at, you know, this decrease in the bearish issues declining, you know, that would give me a sense that there's something bullish that might be going on. But then we have a decline in the bullish readings as well. So I kind of cancel this out, and I'm more interested right now in what's going on with the VIX. And typically when we get those punctures of those Bollinger Bands to the upside, and again, it's an inverted scale, that means that our readings are very low on the VIX. And if we get above the Bollinger Band or puncture it, that's negative for the market in the short term. I look at it as if, you know, over the next day or two is how I use the VIX as far as sentiment. So on Friday, when Carl and I did the Decision Point show, which of course airs at 1:30 p.m. Eastern time on Fridays, get my little plug in there, we pointed out the fact that we are seeing that puncture. We saw that on Friday of the upper Bollinger Band. So it really sent us into the week feeling bearish. And so I have to say I was a little bit surprised when I checked the market and we were making a nice rise, because I am expecting a breakdown. I've moved out of my bear market stance, but I see this rising wedge. That is a bearish formation, and the expectation is a drop below that. And just in the very short term, we still have these readings that are very low, and so I would still look for a short-term decline coming into the week. We're not getting it quite right now, but I would be looking for lower prices into the end of the week. And then finally, I'm going to finish with gold sentiment. And like I said, we calculate this based on the premium and discount that you get from the Sprott Physical Gold Trust, just based on what it's currently trading at. It's either at a discount or a premium based on how much is in the actual trust. It's kind of an interesting way to come up with a sentiment indicator for gold. And what I can say just by looking at the sentiment itself is it is elevated. It's not to the degree we saw back here in October and November, but it is still elevated. And again, sentiment is contrarian, so bearish sentiment would mean bullish for gold. I do see that the PMO is trying to scoop its way back up. It's decelerating, and it looks like it may make a bottom. I drew in a, actually I could probably fix that a little bit on these two tops, or I'm sorry, bottoms. But if you bring this rising bottoms trend line, you swing it up a little bit, it's still holding on to that support level. Having trouble here, as you can see, holding above 123 as far as a close is concerned. I would certainly like to see that. That would make me feel a little bit better about short term what's going on with gold, because I would like to see that area held after we got that beautiful breakout, and then it really crashed. We got an island reversal off of that, and now we're seeing the gap upward. You could see this as another island reversal possibly setting up, but I like that we do have a lot of a higher discount going on, and the PMO is starting to turn up. So I am expecting gold to make it above that 123 level, and I am holding it. I'm looking for a 125 move to the upside. All right, so that concludes sentiment. Let me go ahead and I'll go over my recap of what I just told you about. And this is also going to be in the Market Watchers Live recap. But let's look at this all in total. So we're somewhat bullish with put call. We're neutral as far as AAII. So I'd say now we're like neutral to bullish. Then we're somewhat bearish for the market using the exposure. So now I'd say this cancels each other out, and now we're at neutral. You can see that as far as the sentiment survey is, we're somewhat bearish for the market. So now we're leaning a little bit bearish. Let's look at the rest of these. You have neutral for the market as far as the right-X ratio goes. And I'm looking at a buying exhaustion by looking at that VIX being where it is, and the fact we're seeing that narrowing breadth. So I'm looking for a very short-term buying exhaustion. And finally, as far as gold, I'm bullish. So really, in total, using sentiment, I have to say that I would go in, mostly neutral for the week. But I did, as far as market timers are concerned, and the Wall Street Sentiment Survey, I turned in a bearish for the week. So how about we look at that survey that everybody's filling out? And I thought it was very interesting, Tom, that you're coming in bearish into a week. That doesn't happen very often. And sentiment being contrarian, we really should look for a rally. Isn't that right?
Yeah, I'm bearish, obviously. This time of the month tends to make me a little bit nervous anyway. Just knowing the history of the market from the 18th of the month through about the 24th of every calendar month, I think a lot of it is driven by the options expiration and so forth. So, and I'm just seeing negative divergences everywhere. So I can't help but be a little bit more bearish going into this week.
Yeah, and like I said, I was definitely a bear going into the week. Really a lot of that was based on the VIX, which is what I base my short-term information on. The VIX and breadth are the VIX and breadth. That's what I usually base my short-term on. So I had to go lower because we had that penetration of the upper Bollinger Band on the VIX.
Yeah, I'm a little, even the dollar, by the way, has a negative divergence. If you look at the UUP on a weekly chart, there's a negative divergence there. So it could be that gold gets a little bit of a rally, especially if the market pulls back. But there's a lot going on, I guess, as we go into this week with the Fed meeting next 2 days.
Yes, that'll be interesting.
Yeah, we'll see what they come up with, whether or not they continue to support the theory of we're strengthening, but we don't want to raise, because I think that's what the market would like to hear.
Yes.
All right. Well, thanks, everybody, for being with us today. Please remember to complete the survey as you exit. It is located below your video player. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everyone. We'll see you back here tomorrow. Happy trading.